Hi, I'm Jim Jubak, and welcome to my YouTube video for February 3rd. We just passed the important Groundhog Day milestone. It's halfway in between the winter solstice and the spring equinox. So from this point on, we're sort of sliding downhill towards spring. If you want to see more of my stuff, you can go to my free site, jubakpicks.com, which has 3 portfolios and lots of stock picks. Or you can go to my paid site, jubakam.com, which has 6 portfolios, more stock picks, also some option stuff and ETFs. You can find the links to both those sites down below. Of course, if you like this video, please give it a thumbs up, like it. Subscribe to my YouTube channel so you get a notification of when the next video is, because I do about 3 a week. So the title for today's talk is Why PayPal is a Buy and Facebook Isn't. We've got 2 really big tech stocks that have tanked. On February 2nd, we had a huge drop in PayPal shares. In fact, they were down 24.59% for the day. Today, when shares of Meta platforms, also known as Facebook, are down as of 3 o'clock or so, down about 26% for the day. So let's look at a chart, and then we can talk about why these 2 stocks, which are behaving so similarly, are really very different. With PayPal, one of the things you'll notice is that the big plunge, the 25% plunge here, is almost unnoticeable in the context of the fact that the stock has been down pretty much since July, and pretty much consistently. And then starting in October, you started to get a fairly rapid decline. So what we're really seeing here is a sort of worry about what's going on in the payments area. News out of Visa that payment volumes were slowing in some cases. Worries that growth was not going to keep up in terms of adding new subscribers. All those things. Okay, let's contrast that with Facebook, where you've basically had, like PayPal, it peaked around the summer, but then it's been up, down, so that this big drop at the end, the 25% drop today, really does indeed sort of show up. Both of these stocks are showing strong reactions to the report of 4th quarter earnings, but let's look at what the company reported. Okay, PayPal, I think if you were watching PayPal's management team on color television, their faces would have been either an embarrassed red or a ghastly white, because they started off the quarter's talk by saying, hey, you know that promotion we had on that said get $10 if you get somebody to become a PayPal customer? Well, we got scammed. Bots took this and they took the money and they came up with bogus accounts. So you know what we're going to have to do? We're going to have to take about 4.5 million bogus accounts out of our system that were put on by bots, and we're really sorry. Hey, we're a technology company, but we completely blew it. Okay, so that was sort of the first thing. But the larger picture is the company's had a goal of, like Netflix, for example, of adding as many customers as it can. And the goal was to get to 750 million monthly subscribers as quickly as it could. That would have been a big leap. In 2021, they had 450 million. So you're talking about 300 million subscribers to PayPal properties. They then had to come out and say, we didn't do it in 2021. And in fact, looking at it 2022, we're going to say that we're going to cut guidance for how many we're adding, and we're only going to think that we're going to add maybe 15 to 20 million new monthly users during the year. And Wall Street went, what? As they should have, because this was a company that was pounding the table on how important adding customers was. The company said, this is what we have to do to succeed. Now we're telling you, hey, we're not going to do it. And the company said, in retrospect, that strategy was probably a mistake. And in fact, we're looking at how our business actually works. We noticed that we get the bulk of our revenue from about a third of our users, because those are the most engaged people. And what we're going to do is go from a model where we're looking to just add more accounts to looking at trying to build engagement, because that's where the revenue is and that's where the profit is. And I like the stock. It's in my long-term 50 stocks portfolio. It's down from, where are we in 2021? We're a little over 300. We're down to about 129 today. I would love to get this at 100. The damage isn't done yet. We're still seeing more, dropping another 6% today. So I think you got a chance of getting it at 100. I wouldn't just absolutely have to get it there, but that would be a great goal to have. Okay, now let's switch to Meta platforms, AKA Facebook. And Facebook basically came out and it missed. It missed on revenue numbers, it missed on earnings numbers, and it was a pretty substantial miss on both of those. I'm not a big fan of Facebook's management. In fact, I dumped the stock out of the long-term portfolio in 2021, not because of anything other than Mark Zuckerberg. I think he's a terrible CEO, and I really try not to invest in companies with terrible CEOs when they are as thoroughly entrenched as Zuckerberg is. Because this is a company where people were scratching their heads and going, why are they changing the name from Facebook to Meta platforms to begin with? And people said, sounds like they think they got a growth problem. And lo and behold, they do have a growth problem. And they've got three growth problems. One is that, as the company admitted in its conference call, they're not seeing growth in the 18 to 29-year-old demographic. In fact, those people are not coming to Facebook at all. This is now a goal of Facebook to re-engage them. Good luck with that. The second thing is that, and this is where I don't like Facebook's management, they basically blame the problem on Apple. They said Apple has changed its privacy rules, and hey, it cost us probably about $10 billion in the quarter. Well, what Apple did is it basically said, hey, we're going to require that companies ask permission of people before they collect their data, rather than just having the default be, we can take all the data we want. It shouldn't have come as a surprise to Facebook and other companies. Apple's been talking about this for a while. It's, in fact, I think, a pretty good thing ethically to do. If you think about the issue, whether it's Apple's fault or not, Facebook has got to figure out a way to collect the data from those users so it can sell more ads. And that's really where its ad revenue was the place where it really fell short. Now, going forward, you could buy either of these companies. Both are down big. They're way below where they were at their highs. Facebook is down so far because people loved it so much. This is a stock that's been doing pretty well, but it had, of the 62 analysts, there's 62 analysts that follow Facebook on Wall Street. 52 of those had the stock as a buy up until the collapse. So you're talking about a lot of people who've got burnt in this. If you think about which problem is going to get solved, PayPal has basically said, hey, we're switching from a build to attract as many subscribers as possible to engage them. They've got platforms that work. They've got Venmo to go with PayPal. I think they've got a lot more possibility for growth and engagement going forward. Facebook seems to indeed have a growth problem that they may have hit the wall. There was a great report. This is from a brokerage firm called MoffettNathanson. And the title of the report was Facebook, the Beginning of the End. The company's got a lot of hurdles to jump before people go, hey, this is a stock that I have to own. If you want to own digital ads, you buy Alphabet, Google, or Amazon, or Microsoft. If you want to buy the social media space, you've got a lot of alternatives. So the question anybody would have is, until we see something from Meta platforms, Facebook, that says we've got a handle on these problems, why do you want to own it? And I don't. Thank you for watching. It's been Jim Jubak. If you like this video, please give it a thumbs up. Please subscribe so you get the next one. And on my free site, jubakpicks.com, you can get 3 portfolios, which include things like PayPal and Google and Amazon, but not Facebook. And if you want to subscribe, you get 6 portfolios instead of just 3, with some coverage of ETFs and options. And that's on Jubak AM. And both of the links to both of those are down below. Thanks very much for watching.